Hello traders, hello everyone, welcome to our exclusive 2020 Elliott wave video outlook. As you know, we have been working on some charts at the end of 2018. We prepared and sent out also even a free PDF format with some of the predictions for 2019. So now we will go through some of those charts plus some of the other markets that we think it may have some interesting developments in upcoming year. Now, if you find this video useful and if you are watching it on YouTube or Facebook, please make sure to follow us, comment and like the video. If you're on Twitter, make sure to retweet us and also follow us, and we will actually have a giveaway of free for 12-month membership on which will be selected on each of the social media posts. Okay, so all of the rules can be found in the link at this post. Okay, so also, if you like this video, make sure to subscribe to our YouTube channel. Why? Because I will, as always, I will give out a lot of free video updates through the year. So if you want to be on track with me with those markets that I will be talking about today, make sure to subscribe to our channel. Okay, so what we will cover? We will cover stocks. Also, I will look at put-call ratio. We will look at gold, treasury notes, yields, crude, CAD, euro, pound, Aussie, Turkish lira, Mexican peso, and of course Bitcoin. Okay, so let's start firstly with our put-call ratio. Okay, so what is put-call ratio? The put-call ratio, which is here in the middle, it actually tells you how much is market long or short. If you see this put-call ratio moving higher to extreme levels, then obviously it will tell you that market is extremely short. Okay, so actually what this means is that if something is going into the extreme levels, the opposite will happen. Okay, if market is moving here on the put call to the downside, it means that there are a lot of calls. It means that market is very bullish. So again, it may happen the opposite. It actually market may reverse to the downside. And what I have here at the bottom of this chart, at the top is obviously the S&P 500, is I have the moving average. Okay, the 5-period moving average of this put call ratio. So if I see this moving average at the lowest, it actually means that market is with calls at its extreme levels. Okay, but what I see right now is that actually market is higher than the previous extreme here from the mid of November. Okay, so actually the price is higher, and here we are away from this November level. So it means that there is still room for these calls to move to extreme levels, right, to oversold conditions, and then we may see a turn. Okay, so price is higher, but calls are not at the extreme levels yet. So in my opinion, there is still room for more upside here on the S&P 500. Okay. From an Elliott wave perspective, that I will cover it in a minute, actually what I see is that we are progressing higher into some maybe late stages of a fifth wave, of a very big wave 3. So if I'm on the right track, what I would expect is a reversal lower, or at least at some kind of a top formation at the end of the next year. Okay, now let's take a look at VIX index, fear index, which I think it's also very important. What I see here is actually that market is moving into some very important potential trendline support. Okay, it's definitely a zone from where we could expect another fear, which means a sell-off. Okay, but ideally, as I said, this based on an Elliott wave interpretation in particular, ideally this will occur at the end of the next year. Okay, so since we covered this put call ratio into weeks, I definitely wanted to look now into the S&P 500. Okay, so now this one we also covered in our free newsletter at the end of 2018, where we showed us some of the predictions for 2019. So back then we were looking higher here on the S&P 500. Okay, we saw a very nice but deep pullback into this base channel support. So I was looking higher because on stocks, as you know, it's much easier to stay with the bullish trend and try to mark each of a very strong drop as a corrective temporary move, because obviously you will have much better chances to be right than wrong. Okay, so what we have been looking for is a push higher into a fifth wave, and actually, as you can see, fifth wave is now much higher. It's in progress, and I see actually room for another 300 points, maybe even 500 points of recovery from current levels. So what I came out with an idea that if we are fifth wave, well, we obviously need then 5 waves to the upside within this current leg. Okay, I know that, as I said, on VIX, market is coming down into some very interesting potential trendline support, which makes sense because after all, I see S&P 500 also in a fifth wave, but of a higher degree wave 3. Okay, so I think in 2020 this cycle, current bullish mode, can actually slow down. But as I said, at the end of 2020, because looking at this daily chart, we are still in the middle of this recovery. If we are trading with a motive wave structure here for a wave 5, then we are now in the middle of this recovery. This was wave 1, this was a complex correction for a wave 2, and now you have a 5 sub-wave cycle ongoing for a wave 3, which means that on the way up you will see those pullbacks. Okay, and I pay a lot of attention to intermarket analysis. What may happen during the same period? What may happen with the 10-year US notes? What may happen with gold? Okay, with euro, dollar, yen, and so on. And what I see is actually I'm expecting that 10-year US notes, okay, will actually move higher into a fifth wave from a current pullback. Okay, so if I give you the idea and show you these charts, here is here is the 10-year US notes charts. Firstly, I can actually look at this weekly chart. No, this is monthly. This was a 3-wave setback and we are recovering very sharply. So I think that this uptrend should resume. So the question is, what will happen with stocks when this market makes another swing to the upside? Because I think this swing can actually occur since we have this waves 1, 2 and overlapping structure here for a wave 4, which however could still reach this lower 4th wave extreme here. I think that the yields are maybe even better here. Okay, we have ongoing incomplete 5 waves of decline. Okay, waves 1, 2, 3, we are now in a wave 4, expecting wave 5 to resume from this 4th wave of a lesser degree region. Okay, so during this period, during this sell-off, what may actually happen, or I should say during this current rise, is that stocks will see a move down into these 4th wave pullbacks that I just talked about. At the same time, gold can actually trade higher with this market into the final 5th wave. I will also cover gold later. And at the same time, this market is obviously very important for dollar yen. Dollar yen may see a pullback when this 5th wave show up. Dollar yen may see pullback into wave E, and then when these 5 wave rises will complete, you will see a big 3 wave drop. That's the timing when actually gold will come much lower, dollar yen will see a move to the upside in line with stocks market into these final stages into the 5th wave. Okay, but as always, these are long-term predictions. Let's go step by step. The next cycle that I'm expecting obviously is let's say for the next few months. I would not be surprised if we see this shift to the upside for a 5th wave. At the same time, stocks see a pullback into a 4th wave. Okay, now let's take a look also on DAX. Okay, we covered DAX as well in analysis last year. I have been talking about these 4th waves pullbacks and incomplete 5 wave cycle from there, so obviously I remained bullish. What is interesting about DAX is that actually it moved very nicely to the upside. Okay, but notice that here I have two wave counts, okay? But notice that actually here, this index didn't print a new high. Okay, this is very key level. Why? Because it tells me that there is room for more upside. DAX is lagging compared to the S&P 500. So if DAX is obviously headed above these all-time highs, which, as you know, if the correction is finished, this whole correction should be fully retraced. So if new highs will be seen here, then obviously S&P 500 will move even higher because DAX is lagging. Okay, so it makes sense for me to look into much higher S&P 500 levels after fourth wave pullbacks at the same time when actually this DAX could finally reach and print a new high for a fifth wave here. What I'm looking at here, so DAX is definitely expecting more upside here to complete this 5-wave cycle. For now, that's not the case yet. Okay, there's also possibility that DAX would actually slow down with the S&P 500 if the 10-year US notes will really move higher into that fifth wave. So I have to consider that maybe wave 4 can be even a flat, maybe even a triangle here if we just consolidate for a little bit longer period, maybe at the start of next year. The next extremely bearish wave count that I came out with is this ending diagonal. I haven't seen anyone posting this wave count, so I think it still, based on its structure and potential interpretation that we are in a fifth wave also on the S&P 500, is that sooner or later from a new high, after all, we will see maybe a major pullback. Even if we focus on this wave count, you see market moving into the final stages of a fifth wave. Yes, there are room for more upside, but just be aware that there will not be maybe a decade left for these prices just to keep going higher. Okay, we are definitely moving into some final years here of this year recovery. So even this one suggests that we will see after this fifth wave this ABC pullback, and this one is extremely bearish. It's actually a triangle that occurred then in a fourth wave, okay, and then you have 5 waves up in a wedge shape in the ending diagonal. This is maybe even more important evidence for potential reversal more than this one. Why? Because here you have a contracting range with price going higher, but an overlapping structure suggests that market is not that strong, like we have seen maybe a strong move here and here. Okay, because here you can see much smaller bullish structures, bullish legs. So I would be very careful if we see a new high and then maybe this trend line resistance is retested, then we could see maybe aggressive move to the downside at the same time when the S&P 500 could actually move lower as well. Okay, so this again, it can be actually a few years still away. Okay. Now let's take a look also on gold. So what I said that actually the 10-year US notes next cycle for the 10-year US notes could be moved to the upside into a fifth wave. Okay, and then we see a big corrective setback and stocks resumes back to the upside. So at the same time, what may happen with gold, okay, is actually that we complete this wave C in upcoming year. What I'm looking at on a monthly is a very strong 5-wave drop, and now we have an ABC pullback right into this 61.8% fib level. Okay, and I do not see evidences of a top here yet. Why? Because if you look on a smaller degree time frame charts, or let's say on this chart, you can see that price action is very slow and overlapping on a lower time frame charts. And this consolidation, which I think it's consolidation, why I think it's consolidation is because it takes a lot of time for price to calm down. It just jumping around. Okay, it's definitely the opposite what we have been experiencing in this up move. So if this was a very strong and impulsive reaction, then this should be a correction because it's a much slower price action. So what I'm looking at is that actually here we may see a push to the upside for wave 5, maybe for if you say that maybe wave B has finished here. So we can see a final push to the upside here at the same time when actually 10-year US note could also make this fifth wave. So just to give you another quick look into this 10-year US notes, here's this fifth wave, right? I'm expecting another move to the upside and then a big minimum 3-wave drop, okay? And when this fifth wave is completed, that's when gold may also hit these highs and then both move to the downside. So at the same time, what we could actually expect is, you can see, strong US dollar. I would also expect that euro dollar will move during the same period. Then you would see first scenario is, which I think it's more probable, is that stocks will see even higher prices into some very extreme fifth wave targets. Or second scenario, that you see that there will be a recession. If there will be a recession, then like in 2008, then both markets, gold and the S&P 500, could actually move to the downside. Okay, here's this recession back then in 2008. You can see that that actually this market has also moved to the downside here as well. Okay, and you can see here scenario is also for lower 10-year US notes, higher yields after wave 5, which I covered. Okay, now let's take a look also in commodity index. Okay, this is very interesting. Just a second. Now, why I think that commodity index is actually very important? Well, it's because it has a very strong correlation to US dollar. If you want to see the commodity index that will move to higher prices, okay, or commodities in general, you should see a very weak US dollar. But what I see on euro dollar, okay, I see more weakness coming. What I see on crude oil, what I see on gold, is I see more weakness coming on those markets, which means the dollar could actually still stay strong. So in my opinion, there is a chance that commodities in general, when looking at this equal weighted commodity index, these commodities may not be at the start of this very big bullish cycle yet. Okay, after all, I said that I still see more upside available for stocks as well, and those commodities and stocks can be actually can have a perfect negative correlation. After all, you can see that commodities are at the lows, but you know where actually stocks are currently trading, right, at the highs. So what I'm looking at, if I'm expecting actually that that euro dollar will come back to the downside after this fourth wave rally here, which means dollar will be strong, and this makes sense with commodities to move a little bit lower. But for now, what I see here is that wave 4 is underway on commodities, and it moved out of this ending diagonal. So what I'm looking at is that still, despite this big bearish trend to be in play, there is still room for market to reach this previous fourth wave levels, okay, which means that at least now for a temporary period or for the next few months of 2020, we may see stronger commodities, and at the same time stocks may actually slow down for a correction. As I said, there will be a corrections on the way down, or that actually stocks will see a sideways price move, okay, and at the same time what you would expect that actually euro would recover from current prices, but only temporary. Same thing as commodities, only temporary. I'm looking for dollar, okay, I'm looking for dollar to move down, back to the upside, looking for euro to move up, then back to the downside, same as this commodity index, and it's the same thing with gold, and will be the same thing with crude oil wave counter that I'm looking at. So looking firstly at the euro dollar. Here is this euro dollar wave count that I'm looking at. Well, I labeled here on a weekly chart a flat correction from 2015 up to this 2018 highs. Why I think that this market could see actually more weakness is because this drop to me looks like an impulse. We had a very strong move, as you can see here also on the daily chart, on the way down. This was a very strong reaction in the middle of this decline. So in my opinion, this can be treated as an impulse, and if that's the impulse move from here to this point, then more weakness will be seen after this bounce. So this perfectly goes with the commodity index. Commodity index see a bounce, also a recovery when US dollar is down into these fourth wave levels. This euro dollar also moved into these potential resistance levels, and then you see a drop. So I would say in the next few months we may see sideways price action or even some more upward recovery here on euro dollar before this downtrend resumes, and ideally this downtrend will resume here at the same time when gold would come to the downside and when actually dollar yen would find a support. Okay, but before we go to some other markets, actually we can cover dollar yen now. Okay, so dollar yen, what I'm looking at here is actually I have two wave counts. Okay, the first wave count and the primary wave count is actually that we are building here a triangle. Actually we will see a final stages of this triangle in a wave B that will send us much higher. Okay, and this, what I like about this wave count is actually that at least minimum downward projection should be triggered, because wave E, in my opinion, is still missing. And even if you look at this intraday, or sorry, daily structure from this point, you will see an overlapping recovery. So if someone will say that maybe wave E has finished here, well, for me this current recovery on a smaller degree charts looks overlapping, looks corrective. So that's why I'm looking for this wave E. And the reason why I'm looking for this wave E pullback, maybe even back towards 105 level, is also because, as I said earlier, I'm expecting the 10-year US notes to rally into fifth wave, or yields to fall into fifth wave. And if yields would come down, dollar yen could come down with the stock market as well. Okay, and at the same time, euro dollar could recover to slightly higher prices for a wave B correction that I just talked about. The next very aggressive scenario for potential weakness on dollar yen is that we will see current move to the downside from this upper trend line resistance, but decline would be in five waves, in a multi-wave structure, because I would anticipate wave C to send prices out of this consolidation in a wave B of a lower degree, which means wave B as part of this corrective drop and not as part of this bullish interpretations. Okay, but what is interesting about both wave counts and the intermarket analysis is that actually I am expecting at least, as I said, 105, 106 level, and here I'm expecting a little bit more downside. So in both cases there is room for dollar to weaken, and this makes sense with commodity index. I said they have room for more upside. The dollar could weaken, and of course the most important chart, it makes sense with the 10-year US yields where I'm expecting a drop. And I said that also stocks on the way up will see fourth wave pullbacks, and ideally when stocks will see fourth wave pullbacks, this wave E will actually kick in. Okay. Okay. The next market I want to take a look is cable. Okay. Now cable is making some very interesting moves. What I'm looking at is actually a very big ending diagonal to be forming from this 2007 highs. Okay, and I think it's still ongoing. Why? Because firstly, we haven't seen market falling below this level from 2016. And the next thing is because I'm looking at the current interpretations with two wave counts, and both suggest that this could actually be a corrective movement. There's a chance that this wave B is expanding triangle. I know that market, let me zoom this in. I know that market was extremely bearish down there. Okay, but if market was extremely down there and still when, as you know, when market will be very pessimistic about pound at the very low prices, there is actually good chance that the opposite will happen. And if the opposite happened actually down there, Well, then it may happen similar here. There is a lot of optimism after UK elections about the pound, but actually, from a technical perspective and psychological point of view, there is a chance that we will see a reversal lower. So, as I said, one interpretation valid is that this is an A, B, C, D, E triangle, okay, and the next one would actually be that this is a flat, okay, where you have also nice 5-wave rally here into wave B. But this one also suggests that we will see lower prices. And what is the next very important, probably let's say for the next few weeks, few months for pound, is that even if I'm wrong, even if this is a low and we go higher, you should still see, let me just hide this, you should still see at least 3-wave retracement. This was an 1, 2, 3, 4, 5. If you think cable is going higher, you will see an ABC pullback and then you will see a bounce. Okay, so there is still room for this market, I think, to move to the downside. Okay, so watch out for cable. Don't be surprised, in my opinion, if we see maybe a very big continuation lower here. I definitely will stay on the bearish track with this interpretation as long we are, let me just level this more properly, as long we are trading below this long-term trend line resistance. Okay, and this obviously goes in line with my euro dollar downside levels as well, because I'm also seeing their market in a wave B. Now let's take a look on Aussie. Actually, since we covered euro dollar and we also covered cable, I think we covered this as well last year in 2018. Okay, so what I have been expecting is actually a bounce here for this wave B and then a drop maybe for a wave C of 5, maybe just for limited weakness, and then a recovery. And it looks like that now we are right in this cycle, okay, from here to here. Okay, what about cable? Here was cable. I changed this wave count after this very nice rise, so this market actually didn't go straight to the downside, it just consolidating, but still my view remains the same for a drop into 5th wave targets here, but with slightly different interpretations. Now let's take a look on Aussie. We also covered Aussie last year. I said that market is in a downtrend and should remain in a downtrend to reach our targets here. So now let's take a look on updated chart. Actually, that's dollar CAD. Here's Aussie. So Aussie on this higher degree trend, still market is in a downtrend, no doubt. We have broken this trend line support, so clearly we should stay focused on lower prices. And looking at the weekly, I realized that we are in 5th wave. We fell to a new low as expected less at the start of the year, but now, since then we are now just consolidating. We are not seeing any progression to the upside. We are also still trapped below this Elliott wave channel resistance line. Okay, connect wave 1, wave 2 highs like that, and you have this wave 4 highs then, and here you have a resistance line which is still pushing prices lower. So I see currently market just moving sideways. So in my opinion, this can be a triangle. Within a wave 5 we'll see more weakness. Maybe there was some small kind of a wave 1, wave 2, and then you have this triangle ongoing, and you will see a final push to the downside. And this actually makes sense with what I'm expecting about the US dollar in general. Okay, and also what is interesting is to look at dollar Chinese yuan. Okay, what I see here is some very interesting development. Well, you have seen a very nice 5-wave rise here for a wave A, then a very big WXY pullback in 7 swings for a wave B, right to these support levels, and then you have seen a very first leg, very strong recovery. then you have seen a pullback, but then another leg was not that strong like the first one. But now you have a pullback right into this support line. So my best interpretation with the dollar Chinese yuan is actually that we are building an ending diagonal. This can be wave 1, wave 2, wave 3, wave 4. You expect prices higher for a wave 5. Well, that could be very well played out because a lot of investors or analytics, I think, would be probably caught themselves on the wrong side, on the wrong foot of this overall trade deal scenario, I think. So what we may experience during this fifth wave is, if it really is going to play out, is that actually in the same time you may see more weakness on Aussie dollar. At the same time you may see a pullback on stocks. Remember that fourth wave pullback. At the same time you may see the 10-year US recovery will move into a fifth wave. And at the same time, which is only the case for 2019, you may see gold moving to the upside. Dollar and Chinese yuan are basically negatively correlated, but since the trade deal is in the game, there is gold actually that is trading together with the dollar against Chinese yuan. Okay, so if we respect what is happening right now, gold is moving into a pullback. Gold is moving into a pullback, and dollar Chinese yuan as well. Then, well, both may actually see move to the upside, and at the same time, actually, as I said, stocks can move lower. Of course, if some other, it depends how the trade deal will actually play out. Until it's signed, nothing on the paper, nothing is confirmed. So still, it depends how this will play out actually to have some impact on those markets. Now, let's take a look also on crude oil. Okay, we also covered crude oil last year. Where's crude oil? Okay, too many charts. Looks okay. So, crude oil. On crude oil, we said last year, there was a very strong, massive breakdown. But at the start of 2019, at the end of 2018, we have been warning about potentially recovery. Now, if you have been following us very closely at the end of last year, then you will actually, at the end of 2018, then you will actually know that I prepared a special analysis where I said that crude oil prices could actually recover because they always recovered, if I'm not mistaken, for the last 8 years. If the crude oil prices were falling into the year end, let's say on October, November, December, you were seeing in those modes very strong move to the downside, then at the start of next year, markets have been recovering dramatically fast, okay, on crude oil. So again, the market has been falling at the end of 2018. That's why we were expecting a bounce into wave B. Also, because of these personalities I just described, and also because of the Elliott wave interpretation, we have seen moving wave A into some very nice supports here from a previous uptrend. So we are expecting wave B recovery, then looking for a drop into wave C. And today we are here in this wave B recovery. Okay, we have seen a very nice move, and looks like what is the most important is that wave B is going sideways. Okay, so I see more and more price action or evidences based on the personality of the move that after all this will be a correction. The only question is if this correction will be triangle for a wave B, or is this wave B going to see higher prices? Maybe a retest of this upper trend line resistance. Okay, so trend line connected wave 3 highs, wave 4 highs, and you have a deal with the upper side of this ending diagonal. Okay, so I would be expecting a reversal next year. I'm not sure if this reversal will occur from current this minor trend line or from higher prices, but let me show you the daily chart. Again, some interesting developments there. Daily chart, the primary count is that we are here in a triangle A, B, C, D, and E. E is now moving right into this resistance, so we may see a sell-off, okay? And this sell-off could actually maybe come, as you know, crude oil can sometimes be very strongly correlated to the stock market. Next time, very strongly correlated to US dollar. So it really depends how, again, this market will play out. But if I consider that oil has been on the rise now with stocks for the last few months, but not that strong like stock market, then imagine if stocks will move to the downside, which are the strongest, then crude oil, which is much weaker, may easily fall pretty fast, okay? So my interpretation, the first one, is that we are in a wave, end of a wave E, and that we will see a drop. Of course, this market would be confirmed, or this wave count would be confirmed for a drop into this wave C if we see a very strong 5-wave fall below this trend line, okay? The next interpretation is that actually we are building a triangle not in a wave B of a higher degree, but of a lower degree. So here you have wave A, here you have wave B, and you expect here a rise towards 78.6%. Okay, and what is interesting is that even this wave count that has a bullish interpretation for rise towards $70 per barrel, that even this wave count suggests that we will see a pullback here. Okay, at least wave E. So I think that next year can be very, very interesting. Okay, now let's take a look on dollar CAD. Okay, because crude oil, dollar CAD, they are correlated. If I'm expecting crude oil to sooner or later to complete this wave B and move to the downside, then of course dollar CAD would move higher. So what I'm looking at on dollar CAD, where I have dollar CAD, and what we have been looking at last year. Okay, so here's dollar CAD. We have seen an ABC pullback in the last few years, then we have seen broken trend line. Okay, and I thought that this trend line, because market reacted as a support, will continue straight to the upside. But because crude oil is still sideways, obviously this didn't happen, right? So when I'm looking here at the updated chart, I still think that we are here in this bullish structure that will send us higher. Now here I have a base channel. Now this is Jeffrey Kennedy's channeling technique. If you're not familiar with it, Google it. Very, very useful, helpful stuff. Okay, so you have here, you connect start of a wave 1, end of a wave 2, put a parallel trend line at the top of a wave 1. When you see a breakout of this trend line, you know that market is trading very fast, very strong, typically represents an impulsive structure. And since you have only 5 waves up within this lag, you know that this was wave 3 and that the higher degree cycle is incomplete. So we also have seen nice ABC setback right into this trend line support. So always when market breaks, makes this break within a wave 3 above this base channel line, you may see when wave 4 shows up that the same trend line will be retested as a support. And we have seen a very nice bounce, ideally in a wedge formation here, a leading diagonal for a wave 1. Now we are in a wave 2. So when this wave 2 completes, that's why I'm expecting maybe that actually crude oil will complete wave B as well. Also, watch out the head and shoulders pattern. Left shoulder, head, right shoulder, and you would expect a breakout. Okay, so in my opinion, this market could actually move much higher in upcoming months, years. But firstly, we have to see this wave 2 completion and this trend line broken. And of course, we should be watching dollar in general and crude oil as well. Okay, let's take a look now on Turkish lira. Okay, now Turkish lira, why I decided to cover this one, because I have a lot of requests about Turkish lira. Okay, so what we are looking at here, well, I still do not see a top in place. That's probably the most important thing I have to say. Okay, why? Because there was a very nice strong move, parabolic move to the upside, but after a parabolic move you will see immediately very strong and retracement back to the starting point of this parabolic move. But this didn't happen. What is happening right now actually is that market is moving sideways. So I'm seeing this as a wave 4. Okay, the only question is if this wave 4 is already coming to an end or will be a little bit more complex? Well, in both cases, I think it's a correction. Why? Because if you look at the daily, you have a triangle. Now, the question is if this is either a triangle in a wave B, okay, or is this whole structure already triangle in a wave 4 and you will see immediate push to the upside, or you will see after a move lower. But what is important that this is a corrective decline, because if you label this as a wave 1 and this as a wave 2, well, then your wave count will probably be wrong because triangle never occurs in a wave 2. Okay, that's why I'm thinking either we see this broken, a decisive break to the upside out of this triangle at the start of next year, or we see immediate reversal lower into this wave C, and then we see a strong reversal higher. Okay, so it really depends how this market will respond to this, actually at the current price levels. But in general, generally speaking, I think that this upside is not done yet. Okay, what about dollar Mexican peso? We covered this one as well. I definitely didn't cover the same markets as last year because not all of them offer anything interesting actually. But here's this dollar Mexican peso. I think it's at the top. Okay, so dollar Mexican peso last year, I said that probably we are in wave A, completed wave A, sorry, corrective rally for a wave B, and watch out for a drop into wave C. Well, since then market is just moving sideways. Okay, so what is going on? Well, looking here, well, it can be a very similar situation actually compared to the Turkish lira. We have seen a very strong reversal lower, okay, and since then market is just consolidating here. And what we are seeing is that now market is trying to form this breakdown, okay, a very strong one. Also, watch out for monthly candlesticks formation, and it may be even yearly. If we just continue to progress even lower in January, I would be looking for a drop or continuation lower into this wave C. But then again, this would be part of this very strong, larger degree uptrend. Okay. If maybe I'm wrong on this one, then the next interpretation should be actually that this, as I said, was a wave 3, and this whole price action could actually be wave 4 triangle, and you will see push to the upside. But as I said, because of this broken trendline support, I really would be careful here. Okay, but generally speaking, I think that this whole move is just corrective move on the way up. It only matters of time when this corrective wave 4 will come to an end. Okay, and now the final market I want to look at is going to be Bitcoin. Okay, now Bitcoin, I covered it last year as well. Okay, so what we have been looking at is a very deep pullback right into these supports, and we were expecting a recovery. And looking at today's updated chart, what we have actually seen is a very nice progression to the upside before this current pullback occurred. So actually market bounced very nicely, and more importantly, it bounced with a potential impulsive recovery. So in my opinion, there is a chance that Bitcoin will actually stabilize down here between 78.6 to 61.8%, and that we will see a minimum 3 waves to the upside. Okay, now the question is if this beginning of the 3-wave move will later become a 5-wave move that will take us much higher, or there are just still too many crypto traders to be involved in this market, and this market will just make a temporary 3-wave recovery as part of a triangle maybe, or maybe even of a bullish interpretation, bearish interpretation. Okay, which means more weakness after this maybe leading diagonal here. Just to hide this one. Now imagine that this is a leading diagonal. You see a 3-wave rise and then a drop. but still you would expect at least 3-wave rise, right? So it will really depend how this recovery will unfold. Will be very strong, like an impulse, which will tell you that market is going higher, or will be slow in 3 waves, and actually it will tell you that downtrend is still in play, or that we are going to stay sideways here in a triangle. So in my opinion, there's a chance that some supports will be found here at the start of next year. But just to show you this very strong bearish interpretation, okay? Now imagine this was first leg of a pullback, this was flat for a wave B, and then you see a drop after this 3-wave bounce, as I said, down into wave C, below these levels, into this maybe towards 2000 figure, and then you see a bounce, okay? Why I'm showing you this, guys, is that even if you're a crypto trader or any other markets, what is really important is not what we are thinking, but what it may happen. Just observe and be prepared on any kind of scenario. That's why it's really important for you to have a proper risk position management, okay? Don't risk too much, and more importantly, use stops, okay? Bitcoin is very volatile. I know that there are a lot of traders, investors looking to buy Bitcoin at current prices, but still, even if the wave count is good, even if the setup, support levels, whatever, is very good, fundamentals are good, there's still something always that can go wrong, okay? And that's why be prepared on the worst, and to protect yourself against this is definitely to trade small, to trade responsibly, not to trade too much, and more importantly, trade with stop loss, okay? So traders, thank you very much for attention. Thank you very much for watching this video. Make sure to leave me a comment, make sure to like this video if you find value, and make sure to check our this contest that we are running, okay? The rules can be found somewhere around this video. If you're on YouTube, make sure to subscribe to our channel, because I will definitely be giving plenty of updates through the year on the markets that I covered, and much more, okay? Also, we have a special membership for a 12-year period. We have a 30% off for the upcoming year. So if you love this video, make sure to consider this offer. Thank you very much, and goodbye.